Welcome back. You're watching Market Fatafat on ET now. Let's keep it going and bring on one Foram M.Chheda also on the technicals. And Foram, let's start with your budget trades. What are you looking at this budget in terms of stocks?
Well, hi, good afternoon, and thank you for having me on the show. Well, as far as the budget trades are concerned, a lot of people have been optimistic, and so am I. One is the railways, and another one is the defense space. So, in the railway space, we have Railtel, as I am considering as one of the shortlisted stock. The reason being that we have already seen a good momentum coming in, but at the same time, the stock price has consolidated well enough and looks very good at even current levels. So one can look at buying Railtel at around 500 levels, can maintain a stop loss below the levels of around 470, and can look for a potential up move closer to around 600. And next in the defense space is Walchand Nagar. Walchand Nagar has also seen a very good up move lately in the past few trading sessions. However, in the last 1 week, it has seen a bit of a retracement, even if we consider this week. Now, currently, the stock is showing some signs of bottoming out and again picking up some momentum. Thus, I am considering a buy in Walchand at levels of 324. One can look for a higher target of 390 and maintain a stop loss of around 293.
All right, so that is the budget trades coming in from Forum. But let's hear out what Anand Goenka, who is the Vice President at FICCI, had to say about budget, what they are expecting out of budget. Listen in.
The continuation on capital expenditure and investments should continue. As my colleague Anish mentioned, it does have a multiplier effect. It improves productivity in many ways. It improves job situation in many ways. If you look globally, there's a fair amount of uncertainty with respect to commodity price fluctuation, with respect to geopolitical stress. And CapEx ensures that this growth continues and this investment continues, which will further spur the economy. So in my view, while there could be additional focus on rural economy, it need not take away from the CapEx that the government should plan. The effects on Make in India getting easier, several other social impact, digital impact on digital infrastructure, all of those areas will have a substantial effect. So I believe it should continue.
There are some hallmark changes which have happened in the economy. Focus on manufacturing, change in corporate tax rates, renewed vigor towards PLI schemes. Do you think this budget could really set the tone for that vision document where other, far deep-rooted reforms could be addressed? Land, labor, agri.
No, absolutely. I think this is the start of a new government in terms of 5 more years to go. So we are expecting a very clear vision document for the next 5 years. We are seeing dramatic change happening around the world in terms of climate change and sustainability being a big area of change. And therefore, we hope to see some more visibility in terms of a clear vision document on circular economy, on taxonomies for how do you create and identify green financing. So the entire sustainability piece is one area we would like to see more on. The second is the Finance Minister touched upon the 1 lakh crore fund for innovation. So some more clarity on that space will certainly help. And the third is to boost manufacturing, which is possibly the largest future employment generator in the long term, and with positive changes happening on China Plus One, various changes in infrastructure investment, logistic cost reduction that is happening. I think we hope to see continued improvement in the PLI scheme and new PLI schemes coming in, which may be linked to employment generation. So these are some areas where it would be good to see larger scale reforms and continued work.
Okay, and let's keep it going with all the stocks that have been buzzing in trade, and we should talk about Havells. They just reported the numbers are short just right now that we're looking at it in terms of the numbers reported by the company. So in terms of the revenue, we are seeing a growth of 20%. We were expecting almost similar lines of growth that we were expecting. 5,798 crores is what the revenue came in at versus our expectation of 5,700 crores. A slight bit of, above the estimate is what the revenue came in at. Profits of the company, we were expecting around a 46% growth. We're seeing a growth of around 43% this time on a year-on-year basis. Revenue coming in at 411. Margins almost just a 40-50 basis point miss from what our expectation was. 9.9% is what the EBITDA margin has come in at. So let's keep an eye out on that. Overall, Lloyds has seen a very strong performance. We were expecting 35% growth. Lloyds has managed to see a growth in terms of almost more than 45% in terms of the revenue. EBIT margin also continues. EBIT, actually, the EBIT performance of the company for Lloyd is at 67 crores versus a loss last year, EBIT loss of around 61 crores. So keeping an eye out on that, Lloyd surely has seen that turnaround, because last time also they had become a bit positive. Margin is what we are watching out for in terms of that. The ECD segment has done well. Cables and wire segment also is seeing a slight bit of a improvement in the cable wire segment as well. All in all the segments have seen a growth on a year-on-year basis. So interesting to watch out for in terms of Havells, though the stock is a bit under pressure today. Right now, 1.4% downtick. We'll wait out for the press release as well, Cheryl.
All right, let's actually quickly pull up the charts for Nifty and see where it is at this point in time, because while we were marking Havells and also talking about budget, we saw a sharp spike take place in Nifty, where briefly actually touched the 24,800 mark as well. First time ever, fresh record high levels coming in, needless to say. So a fresh record high levels coming in for Nifty. You have Sensex that has surpassed the 81,000 mark and continues to stay there. So over the last few minutes, we've seen a sharp spike come about in the benchmark indices. Take a look at what Infosys is doing, because that one is actually seeing a good spike just ahead of its earnings. Remember that it will be reporting its earnings right after market close, or somewhere around that time, and the stock is trading higher by about 2%. One point in time, it was trading higher by about 2.2%, hitting the highest level since April 2022. So keep an eye out on Infosys as well in the markets. Also, needless to say that we are at the fresh record high level, again trying to surpass those levels and touch 24,800 as we speak. That's on your screen for you. That is Nifty, fresh record high level once again. So let's talk about another stock that is buzzing in trade then, IDBI Bank. All eyes on that particular counter. There are reports that have indicated that the government sale of the majority stake in IDBI Bank will happen after an assessment report by the RBI. This is as per reports coming in on the Times of India. The central bank's vetting of the bidders will be watched in the budget also, which will be due on July 23rd. Remember, everyone's waiting to understand what exactly is happening and how will it transpire the divestment in IDBI Bank. And there are reports indicating that it is actually going ahead for the next step. And that's why the stock is seeing a good run up in trade today, holding on to gains about 5.7% or so, Vinny.
Okay, surely keeping an eye out on that one. But let's move on, Forum. On the technicals, you've picked out PCBL for us. What's the chart indicating for this one now? Where do we see it headed?
PCBL, after forming a high nearly like at 334 in the month of February, we've seen the stock price almost correcting nearly 35%. It formed its base near 217 levels, which also was little marginally lower than the 200-day moving average. However, it consolidated for the next 3 months from March to June, and from June lows, it has now picked up a lot of momentum. So this has triggered the stock price to move above important multiple moving averages of 200, 100 as well as 50. And right now, the stock price is breaking out, or rather broken out already, from a resistance level of around 278. So this breakout has been accompanied by a very good increase in volume, and we can see that from the past couple of trading sessions, there has been some good accumulation also happening. Thus, the overall stock looks quite bullish, and then thus one can look at buying the stock at near 275 levels. One can maintain a stop loss below the levels of 267 and look for an upside target of closer to 318 to 320.
All right, so that is about PCBL, but let's put the spotlight back on our budget, because we are just days away from the next big event for the market. The finance minister is expected to announce a big push for capex, infra and manufacturing. And with that backdrop, let's see, check out what brokerages are actually betting on right now, which are the sectors according to them that will stand to gain and in fact look attractive at this point in time. Ashesha is here with all of those details. Ashesha, you have done all the number crunching and you've gone through all the data when it comes to what brokerages are expecting. What are they throwing up?
Well, absolutely. Budget is round the corner, and here's how brokerage houses are positioning themselves ahead of the big event next week. First up, let's talk about Citi, where they expect markets to consolidate ahead of the big event. In fact, they say that every dip in the Indian market will be a buying opportunity, and they've given a nifty target of 24,400 for June 2025, which of course is much below the current market prices, especially after the run-up that we have seen in today's trading session. So they say they are overweight PSU utilities and PSU defense, industrials, banks and insurance. And on the flip side, they are underweight consumer discretionary, IT services and metal sector. So that's the view as far as Citi is concerned. Let's move on and let's also talk about what Morgan Stanley has to say on budget expectations. They say that markets are approaching budget with exuberance. They see volatility and correction post-budget. As far as sectoral expectations are concerned, Morgan Stanley says that they are overweight financials, industrials, consumer discretionary and IT sector. So IT is where they are overweight on, and they say they are underweight all other sectors except these four. Moving on to what other brokerage houses have to say, let's shift the spotlight to Jefferies then. Personal income tax exemption and increase in rebate is what brokerage houses are expecting. So Jefferies says the tax cut will impact a whole host of individual stocks, the likes of Hunasa Consumer, Trent, Reliance Industries, Bharti Airtel, Jubilant Foodworks, Zomato and so on and so forth. They also say that interest subsidy scheme for urban housing will be positive for a whole host of companies, the likes of Aavas Financiers, Home First Finance, Macrotech Developers and Suntech Realty. Moving on to CapEx then, that is going to be a big focus area for the government this time around yet again, and L&D will be a big beneficiary of that move. Apart from that, boost to rural infra and welfare schemes will be a positive for a whole host of companies, the likes of TVS Motors, Hero MotoCorp, M&M and HUL. We also expect some changes with respect to tobacco taxation, and that of course will have an impact on ITC as well. Let's also talk about Nuvama and what they expect. They say they expect rural boost, and on account of this, they prefer consumption over capex theme. They prefer private banks over public sector banks, and they also say that they are preferring IT and pharma over domestic cyclicals. Lastly, let's talk about JM Financials, where they say that they are preferring FMCG, housing finance companies and capital goods companies. So yes, across the board, given the exuberance that we have seen in the market ahead of the budget, consensus expectation is that perhaps market could consolidate going forward, but housing finance companies, capital goods, FMCG is where all brokerages are bullish.
Yeah, Shrisha, thank you so much for that. Keeping an eye out on all those sectors over there where brokerages are bullish on. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates and more stocks after the break. Welcome back, and you're watching Market Fatafat on ET now. Right now, the Nifty trading about 24,800 levels comfortably. 24,816 is what the Nifty is trading at. But let's move on and keep it going with the buzzing stocks. Then we do have the next one, that is L&T Finance, that's come out with its numbers. And on the back of that, we've seen some brokerage notes also coming in. So this note we have is coming in from Citi that I'm going to be highlighting. Citi is maintaining the buy rating. A target price of 221 rupees per share is what they have given for L&T Finance. They said that there was a broad-based retail AUM growth that one saw coming in of around 31%. Also, this is despite in that seasonally weak quarter. So yes, keeping an eye out on that. Other than that, what they also highlighted that the NIMS fees are sustaining above that 11% mark. OPEX as well as the assets have seen an improvement. So those are the positives that Citi highlighted for L&T Finance. As of now, the stock is a bit muted in trade, just holding on to gains of 2/10 to 3/10% in trade.
All right, so that is L&T Finance for you. Gaurav, GMR and Airports, why is this one in focus today?
GMR Airport has also come up with their monthly update, and if you look at the June update, and when we look at the monthly month-on-month update, that was actually a little negative for the company. So first, let's talk about what we have got from the company. They have handled more than 1 crore passengers across the airports, which is up almost by 7.8% on a YY basis. And in this, if we look at the breakup, domestic traffic has increased almost by 6.4%, while international traffic has increased almost by 13% on a YY basis. Apart from that, they have also highlighted that the passenger traffic has remained above 1 crore level since December 2023. And lastly, they also highlighted that the Delhi airport handled highest ever single day passenger traffic of around 23 lakh in June on June 16, 2024. But apart from that, when we look at the month-on-month update and when we look at the overall passengers, that has gone down almost by 2%, and that is the reason why we are seeing this kind of negative movement coming up in the stock, because when we look at the stock performance, that is down 1.3%. So watching out on this counter on the back of the update that I have got.
Okay, let's move on to the next stock. And Foram LIC is the one that you've picked out for us. What are the charts indicating for this one? Could we expect some bit of a move now?
You're expecting that momentum to come in. Now, overall, the stock has kind of underperformed relative to the benchmark index. Now, the stock had formed a high of nearly 1,175 in the month of Feb, and there was a consistent decline coming in. However, this halted, and now from April onwards, the stock has been in a very broad consolidation. So the lower levels has been 885, and on the higher side, or the resistance level was 1080. The stock price did see a good breakout as on Tuesday and closed very well, strong enough, along with some good volumes. So when the stock is giving good breakout with volumes, it's indicating a lot of bullishness. Today we see that our stock price has been a little quiet, or has been into the negative by around 1.3%. However, it's retesting the breakout level. It makes it quite attractive to buy at these levels. Thus, one can even look at buying the stock between a range of around 1060 to around 1070. Can maintain a stop loss below the levels of 1017, and can look for a higher target of closer to 1200 levels.
That is all about LIC. Then Polycab numbers have just come in, and if you look at the numbers coming in for Polycab, actually the PAT is below the street estimates, a tad bit below. If you look at the revenue, it's come at around 4,698 crore rupees, which is higher by about 20-odd%. EBITDA is coming at around 12.4% versus 14.1% on a year-on-year basis. If you look at the numbers, actually, I stand correct, a tad bit better than what the street was estimating for the PAT and the revenue. However, the margins, if you compare it on a year-on-year basis, there is a bit of dip. The stock is actually now seeing a downtick about 1.6%, a sharp knock right after the earnings have been declared. But Ankita, all eyes on Asian Paints, and that one came out with its earnings yesterday.
Yes, in fact, a weak set of earnings coming in for Asian Paints. In fact, the revenue was down 2% on a year-on-year basis. The PAT was down 25% on a year-on-year basis. EBITDA also saw a knock of 20% on a year-on-year basis, and the margin was at 18.9% versus 23.1% on a year-on-year basis. And the Indian decorative business volume growth stands at 7%. Goldman Sachs also came out with a note where they're maintaining a neutral on the counter. They have cut the target price to 2,750 rupees. They feel that there's a sharp EBITDA decline, and the headwinds are likely to continue going forward for the company, and the impact of increased competitive intensity is likely to create a lot of further pressure going forward for Asian Paints. JP Morgan also came out with a note. They are maintaining a neutral, and they've cut the target price to 2,800 rupees. They feel that the earnings have been a miss because of weak margins and tepid revenue growth. We also had the management of Asian Paints. We had Amit Singhal, MD and CEO of the company, who expects double-digit volume growth in FY25. Let's go across and take a look at what he had to say about the company's numbers.
We are still looking strong from a point of view of Q2 in terms of getting into double digits as far as the volume growth is concerned. Overall, we've had inflation which has come up in the last quarter, which is unprecedented in terms of what was our estimate. It was closer to about 1.8% in terms of what we saw. And we are looking at another prediction of inflation in the Q2 as well, which is supposedly around another 1.5% or so to that extent. We've always maintained guidance that our PBTIT margins would remain between the 18 to 20%. And even when the margins were higher, we maintained that that band is something which we kind of adhere to.
All right, and lastly, Foram, let's come to you. JM Financial is the counter that you've picked for us. How is it actually looking on the charts?
Well, the stock has actually been into a consolidation for the past 3 months in a range between 71 on the lower side and 89.9 or closer to 90 on the higher side. So it's been in this 25% of a range. Now, just in the beginning of July, we saw a good breakout, and the stock price has been now first hanging around between 100 to around 98 levels. Today, we can see the stock price has been retracing a little. So this retracement should be considered as a good opportunity to buy. The reason being that there has been a good increase in volume and the stock price is now moving above the multiple moving averages of 50, 100 and 200. So since the underlying trend is bullish, so I am bullish on this stock. So, and in case somebody is holding on to it, can continue to ride on for higher targets as well. The upside targets that I'm looking for is nearly 110 and one can trail the stop losses to closer to around 92 levels.
Okay, that was stock number 21 and the last stock for today. So thank you so much, Foram, Ankita, Gaurav, as well as Dhwani for joining in with us today on Market Fatafat. And it's a goodbye from Cheryl, myself, as well as the team who put this show together. Don't go anywhere. Closing trades will take the action forward.